As investors, we look for the best bang for our buck. We want to know what's the next big thing, or what's going to be the next investment sector that's really going to take off. And the best time to buy into a sector is when it's really unloved, ignored, or potentially oversold. So I've got one sector or commodity that could fit all those characteristics. What is that, you ask? Silver.
Silver.
I'm Biko Konstantinos, and that's what we're going to talk about today. You know that shiny stuff that's been highly sought after throughout the entire history of mankind? You get it for coming second at any Olympic event? And even the most famous betrayal recorded in the Bible was a result of 30 pieces of silver. So let's consider why buying silver now could potentially make you a fortune. Silver is a chemical element with the symbol Ag and the atomic number 47. Here's a look at the element properties for silver. Silver is a soft, white, lustrous transition metal that exhibits the highest electrical conductivity, thermal conductivity, and reflectivity of any metal. The metal is found in the Earth's crust in the pure free elemental form, native silver, and also as an alloy or mixed together with gold and other metals. Most silver is produced as a byproduct of copper, gold, lead, and zinc refining. Silver has long been valued as a precious metal and forms part of the precious metal family, which is gold, silver, platinum, and palladium. Silver is used in many bullion coins and sometimes alongside gold. There's many references in movies and historical texts where people would talk about silver and gold together. Even thinking about the pirate era, where the Spanish would often try and transport their gold and silver from places like Mexico, Central America, and South America. Spain's wealth grew massively based on the amount of mining they were doing for gold and silver. As one of the 7 metals of antiquity, silver has had an enduring role in most human cultures. Pop quiz, what's the 7 metals of antiquity? If you don't know, I'm sorry, but you're gonna have to subscribe to my channel. Here they are for your information. Other than in currency and as an investment medium, silver is used in solar panels, water filtration, jewelry, ornaments, tableware and utensils, in electrical contacts and conductors, in specialized mirrors, window coatings, in catalysis of chemical reactions as a colorant in stained glass, and in specialized confectionery. Its compounds are used in photographic and X-ray film, and dilute solutions of silver nitrate and other silver compounds are used as disinfectants and added to bandages, wound dressings, catheters, and other medical instruments. So on top of being a precious metal, there's a multitude of industrial uses for silver. And that's just why it might be the next big thing. So silver has value. You can't just print more silver like you can with fiat currency. That's one great reason to hold precious metals. Their value can't just be printed away like the almighty dollar. However, prices for precious metals have been coming under a lot of pressure lately as the global investment community tries to digest everything that's going on at the moment and consider where to park their money. Looking at the daily silver chart, we can see that after COVID, silver went on a super boom rally. This took the price all the way to $30, but it wasn't able to breach that level and has since been trading lower, with the current price of silver right around $20 US. So silver is currently trading slightly above the pre-COVID levels, which really isn't representing the true value of silver in my opinion, both as a growing industrial commodity and a precious metal investment. Commentators are now suggesting that the silver price might have bottomed and that silver as a commodity has been oversold. This potentially represents an amazing opportunity to invest into silver at depressed prices before the next silver boom, which could take silver all the way up to $100 US. Now, investing into something that is unloved and being ignored is not an easy task, but it can yield the very best returns. If you can invest into something when nobody loves it and hold on when it starts to grow investor momentum and demand starts to really increase, that's when fortunes can be made. But for fortunes to be made, they do actually have to go up. So what are some of the catalysts that can turn silver from being unloved to being highly sought after, like in the gold and silver rush days? Referencing an article from goldalliance.com, we've currently got uncertainty in the stock market. Although the cost of silver is usually uncorrelated with the stock market, precious metal prices historically have risen as equity values sank. So if the stock market sees an extended correction, the price of silver could go up. And for more information on where the stock market could be headed, check out this video here. Stock indexes were at all-time highs back in December of 2021, but then they took a dip but recently have rallied again. Trouble is, there's a number of indicators suggesting that the stock market as a whole could still be very overvalued. And if we consider the Buffett indicator, which measures the entire value of the US stock market against GDP, it's still massively stretched above the long-term mean. This shows that stocks are nowhere near cheap and definitely could fall further in the future or could languish just in general. And if stocks don't perform well, investors will look for other assets and silver could definitely benefit. The silver to gold ratio shows that silver is currently cheap. To determine the ratio, you just divide the price of gold by the price of silver, and with the price of gold being around $1,800 and the price of silver being around $20, the ratio currently sits at around 90. Now in the past century, the gold to silver ratio has averaged out around 50, although there's been some very wide fluctuations in between. Now at the current gold price of $1,800, silver would need to rise to around about $36 to reach that average ratio of 50. So if silver got back to that long-term average gold to silver ratio, that would represent an amazing return. But consider if the gold price goes up strongly and the gold to silver ratio still gets back up to 50, that would represent even better returns. Rising demand for green energy and electronics. Global demand for silver is reaching all-time highs as the precious metal is being used in many emerging industries such as renewable energy, solar power, and other important green initiatives used to fight climate change. As you can see from this chart, demand for silver has been growing steadily over many decades, and recently in 2021 has grown exponentially. Rising inflation in the US and around the globe. During the inflation crisis in the 1970s, the silver spot price rocketed from $12.40 to almost $50 in just 10 years. This was an increase of almost 400%, and considering how relatively cheap everything was back in the 70s, that was truly an unbelievable rally. And considering we could be staring down another 1970s type inflation crisis, demand for silver has the potential to go exponential. Struggling silver mining supply. Although demand is continuing to rise, the production of silver took a big hit during the pandemic, and production is not back to pre-pandemic levels. So the rising demand, coupled with insufficient supply, could end up putting upwards pressure on the silver price. Here's a chart of global silver production, and we can see the big hit taken in 2020, and it's starting to slowly come back again. Russian invasion of Ukraine and global political instability. Historically, in times of geopolitical tension, precious metals such as gold and silver do very well because they're considered a safe haven. And if we look at what's going on around the globe, it's not just about Russia versus the West. There's alliances being formed in what they're calling the BRICS nations, and this could end up seeing a play to take down the US dollar as the reserve currency of the globe. And on top of that, we've got more and more countries going into major economic crisis. We've got countries like Venezuela, Argentina, Turkey, and recently we've seen some crazy scenes in Sri Lanka. We're also seeing droughts and severe food shortages in some developing countries. So truly, the global picture looks very uncertain at the moment, with some very significant challenges ahead. And this could all result in a massive run to precious metals, especially gold and silver. So we've got some very compelling reasons why silver could really take off over the next several years, but how can we profit if this was to occur? First, we've got owning physical silver. You can purchase silver coins or even silver bullion or bars. With physical silver, you can keep it yourself in your own property, or if you had large amounts, you could keep it somewhere like the Perth Mint and pay them a storage fee to hold it for you. So the purchase of physical silver would normally mean you'd wanting to hold that for a longer period of time, because it's not as easy to just buy and sell straight away like you might a stock on the stock market. Buying silver futures or the silver gold price. So you can buy the silver price using futures contracts or using an instrument like contracts for difference. As long as you have the right account set up, it's easy to buy and sell, and you can also use leverage. So the risk of using leverage to buy the silver price means that moves against your position can magnify your losses, and sometimes you'll be forced to sell due to a margin call or not having enough balance in your account. So you can make great returns this way, but there is a lot more risk than just owning physical silver which you've paid for yourself. You can purchase ETFs that own physical silver. An ETF can be bought and sold on the stock market, so it's easier to buy and sell than physical gold, but you'll be able to profit from any rises in the silver price. The only cost is the fee to hold the ETF, but this is relatively quite low. So an ETF that owns physical silver can be a great choice if you don't want the risk of loss or theft of your physical silver, and if you want the convenience to be able to buy and sell easily on the stock market. The two main ETFs owning physical silver are iShares Silver Trust, code SLV, and Aberdeen Standard Physical Silver Shares, code SIVR. Next, we've got silver mining stocks. By owning silver mining stocks, you can get more leverage than the actual silver price because companies' profits can sometimes rise exponentially. So if the silver price went from, say, $20 per ounce to $40 per ounce, that's a 100% rise in the silver price. However, a silver mining company that may have been $1 when the silver price was $20 could rise to say $3 or $4 if the silver price went up to $40. So you can make greater returns on silver stocks, but the risk is also much greater. Silver mining is not easy. You've got a lot of expenses. It takes a lot of money to find the silver, dig it out, and then produce it. And on top of the mining risks, you've also got sovereign risks depending on where your mine is located. So buying individual stocks that mine silver can be very lucrative, but you have to do your research, and that research has to be ongoing in my opinion. Lastly, you can buy ETFs that own a basket of silver miners. So instead of buying an individual silver miner, you can buy an ETF that owns several silver mining companies, and by doing that, you reduce the risk of owning an individual stock. This is a great option if you don't want to do the research into specific companies, but you want to invest into the sector. Finally, we should consider the relationship between gold and silver. The gold price here represented in the yellow is a lot less volatile than the silver price, which has massive spikes up and down. But if you look at this chart from a high level perspective, it's very clear that silver tracks the gold price. So both silver and gold spiked in 2011, but silver spiked way higher relative to gold. So while the current silver price here is nowhere near the previous high, the current gold price is actually very close to the high seen in 2011. So overall, the chart for gold looks very strong, and in my opinion, there's a very high probability of gold breaking out to new highs over the coming years. If that were to happen, silver would definitely follow, and it would also make much higher returns, because when gold rises 1 or 2%, silver could rise 5 or 6%. And that's always been the case, and why silver is the more volatile cousin. So if you're bullish on the gold price, investing into silver would be a no-brainer in my opinion. Every cloud has a silver lining, and silver might be about to rocket through those clouds all the way to the moon. I'm Biko Konstantinos.